Friday. You made it through another week. Congratulations. You're still a realtor. You're still a lender. You're still an escrow officer. You're still an appraiser. Anybody out there who's watching this in the real estate community, you did it. Well done. It was a tough week, let me tell you. There was a lot of bad news that came down the pipe, and what I wanted to do today was just kind of recap that and make sure that everybody understands what is going on and why it's going on and how we're going to make it through, because I know we will. We stick together in this thing, we're going to make it through it. Now, that's the first thing I wanted to talk about is sticking together in this thing, and I wanted to make sure that everybody was taking advantage of the comment section that is up above me. There's a little bubble up there that says comment or make a comment. What I want you to do, a lot of people were doing it over the last couple of days and taking advantage of it, and I really haven't mentioned it, but I think what this is going to do is bring more people into the discussion, and it's going to give us some more education. It's going to give us more people telling us what experiences they've had with banks and with short sales and giving their opinions about what has been going on in their own business. I got some fantastic responses this week in criticizing me for what I had been saying, which I love, giving me some information about, hey, I want to hear about this, and what about that? You said this, but I didn't quite understand it. So that's a great place in the comment section to hit those comments. And what happens is I get notified that you've made a comment, and I'll go in there and I'll post a comment. Everybody can see it. It's better than sending me an email because you're only getting the individual response. So we see your question or your comment, and then everybody gets to see the responses from myself and from everybody else in the community. So make sure that you are using that comment section. I think it's going to be a fantastic way to start educating one another about our experiences and maybe how we can get an edge, because we really have to take the perspective here that we are not in competition with each other. There is enough business out there to go around for everybody, and if we're sharing some of our tips and our secrets and things that work for us, it will help build our real estate market back up. This is a community effort here. When we're trying to make something from nothing, because basically our industry has been ground into dust, we need to build it back up. And the way to do that is just to help each other out with some information that we've got handy. So use that comment section. I think it's going to be a tremendous help to everybody. And again, I wanted to thank people who made comments this week. I had a lot of individual emails that I responded to and a few comments that used the comment section on the blog. But, we've got some very educated people in our industry, and we need to take advantage of those people, because my opinion obviously isn't the only one, and the information that I have is not the only one. So I want to hear from everybody. And again, the main thing here is to help us, to help each other make it through this. And that's kind of the next thing I want to talk about. This has been a very tumultuous week as far as news is concerned. A lot of information came out from FHA, a lot of things that are going to kind of change what we're doing and how we're doing it. And I wanted to recap that a little bit. Basically, minimum credit scores, they're going up. 640 is going to be the new minimum. There's going to be a few banks that linger behind, and they're still going to be in the 620s and 580, 560 maybe over the next couple of weeks. But right now, if your borrower doesn't have a loan approval at those lower credit scores, or they don't get it here within the next week or two, there's a good chance that they're not going to be able to qualify for a loan at those lower scores, because the banks are increasing their credit score qualifications. Also, the other thing is the FHA is going to be now using the pseudo HVCC legislation. Now, FHA is not requiring that we use the AMCs to order the appraisals, but the verbiage is such that really the lenders have no other opportunity but to order it through the AMCs, because there's really no way to track who is ordering appraisals if they are non-commission based, or they're not have some kind of incentive for that transaction to close, because that's the way that rule reads in that those new guidelines. So expect longer turn times to get appraisals back, and expect higher fees for the client because of that change in those guidelines. Also, the net worth requirement for lenders is $1.25 million now, and that is going to eliminate some of the FHA lender riffraff that turns in these loans that have first payment default, and they've got a lot of loan fraud in that lower end bracket of lenders who are doing FHA loans. Now they're going to erase that kind of from the portfolio that FHA has to insure, and I think that's going to keep the FHA's capital levels higher. And again, this is the goal of all these new guidelines, is to make sure that FHA is meeting Congress's required capital levels that FHA has to maintain in order to pay those insurance claims to these insured FHA loans. So again, we've got Also changes about appraisal portability. It used to be that we could order one appraisal, and then if the appraisal came in lower, maybe your borrower changed lenders, they went to another lender, and another appraisal was ordered, they got the value they needed at the other lender. Now that is not going to be able to happen anymore unless an underwriter determines that for some reason that appraisal was, had an error in it, or the appraiser did a, haphazard job in preparing it, or if the first lender that had that loan is dragging their feet and making that transfer to the new lender, and somehow that delays the transaction with the new lender, and it causes a increase in cost for the borrower. At that point, a new appraisal can be ordered, but those increase in costs and documentation has to be provided in order to provide proof that that is actually what was happening. So again, an almost virtually impossible situation to prove. So the rules basically eliminate second appraisals for pretty much any reason. So just don't think that that's going to be an option. If you don't get value with one lender, you switch it over to another, because after January 1st, that's not going to be available anymore to do. So again, those are just some of the few of the changes that are happening. More will be coming. So again, I really want to emphasize, make sure that you're making comments in that comment section up above me there. And because as things change in this industry and more news is announced and more changes are coming, I guarantee you more changes are coming. I mean, we can't just sit here and expect that things are going to stay the same as default rates continue to increase and capital levels with these lenders are going down. The Fed announced today that they are going to withdraw the purchase for the mortgage-backed securities in March of 2010. They are leaving the door open depending upon whether or not what happens with the economy. If it starts to digress and go back into another type of recessionary situation, then they may come back in and start purchasing those mortgage-backed securities again. But for the most part, you can expect that more news is coming that isn't going to be favorable. So the only way for us to combat that is to work together and make it a community, effort to try and keep each other in this business. So again, make sure you're commenting and give us your opinions. I love the opinions. I love what people have been saying over the last week. It's fantastic. So keep it up. I hope everybody makes it another week. That's the goal. We're just going to take it 1 week at a time. If you can make it through a week, you're going to get another client. You make it through another week, you're going to get a paycheck. I promise you, it starts happening. It starts building on itself. So stick in there. Relax this weekend. I know a lot of people are going to be out showing property. It's going to be a nice weekend. Make sure, let your buyers know there are time constraints here. I mean, with the first-time home buyer credit, lender turn times are just going through the roof. I mean, we're at conditions right now with even our top lenders with our best turn times are looking at, some of them are 5 days. Your Wells Fargos, the big guys are at 5 days for conditions. Some of the smaller guys are still 48 hours, but for the most part, if you're looking for the best rates, the best loans, you're going to be at 4 to 5 days for turn times right now, just for conditions. Underwriting is another 4 days. So you guys, we need time to get these transactions done. So get your buyers into contract as soon as you can. Make sure you're on them to turn in their documentation and get things moving, because we're running out of time on these guidelines. We're running out of time on the buyer credit, and we just don't know what's going to happen, what's coming down the pipe. So again, make sure you're checking out those links and docs down below, HVCC, all the good stuff that's been there. It's still there. We'll have a new poll question up next week, but make sure you start using that comment feature here on the blog. I think it's going to be a tremendous advantage to everybody. So again, have a fantastic weekend. Comment, email me. I'll get back to you as quick as I can. I'll see you Monday.